So today we all are here and we'll be discussing about financial planning. So can anybody tell me what is the role of financial planning in investing? Any idea?
Ma'am, suppose you have like as a financial planner, I have to make over a future. Like suppose I have 1 lakh rupees, so in which terms I have like bonds, security market, and the stock in which I have to invest exactly. The plan should be in a way that if I have a 1 lakh rupees, the future will be increase. If I have 1 lakh, not to kept. Well, I have 1 lakh rupees, but I'm not investing anywhere. I just kept in my wardrobe and things. I should invest it in a diversified portfolio. If suppose some occurred losses according to market volatility, some like we can take example of COVID. So my money should be not like ma'am, as a market. It should be I can example like I
Okay.
have
But good initiative, Pankaj. So guys, whenever we are talking about financial planning, understand what do you mean by financial planning? Financial, that means which is something which is linked with money, correct? Your
Yeah.
finances. Planning, that you have to plan it accordingly so that it can give you a value. So value in what terms? So everybody wants their money to get double, correct? Now, when you will be working as an investment bankers, so you will be having the responsibility to cater to other general public, right?
The client,
Uh,
yeah.
Sorry, yes, Azim,
No, yeah, I said like for the client,
for the
what their
client.
needs.
Correct.
Yeah,
Yes,
yeah.
yes. So as a investment banker, you will be working to fulfill their needs. So what will be their needs? To plan their finances. And why they will be coming to you? Because you people will be expert in that. Now, what is the sole motive of doing the financial planning? Wealth creation.
yes ma'am.
Yeah.
Ma'am, the first is wealth creation. First point.
Yes, okay. So when we say wealth creation, what do you mean by wealth creation? Anyone?
Ma'am, like you have investor, you have like as investor bring for 1 lakh rupees, I have to make around 1 lakh to 150,000. My money should be increased for value which I gave to you. So
Yes,
like
okay.
yes,
Good point, Pankaj. Good point. So, anyone else? Let's Pankaj give others also chance, right, to be participating in the same discussion. Okay. So, as Pankaj said one thing to all of you that to make your money valuable after some point of time. So that means if we are investing right now, so we want the money to be double in the certain period of time, correct? Now
Yes.
you tell me, will 100 rupees will be same if you invest it today after 5 years? Laddu
No.
Kumar, let's say आपने 100 रुपए आज इन्वेस्ट किए, राइट? क्या उस सौ
राइट मैम।
रुपए की 5 साल बाद भी वैल्यू वो ही रहेगी?
नहीं मैम, बढ़ जाएगी।
बढ़ जाएगी। यानी जो चीज आप आज 100 रुपए में खरीद रहे हो वो अगले 5 साल में 100 रुपए में नहीं खरीद पाओगे. So guys,
नहीं।
what I said exactly is in investing, the major part is role played by the time value of money, right? What is time value of money? Again, if you are investing currently 1 rupee, 100 rupees, 1,000 rupees, or 1 lakh rupees, am I clear? That 1,001 lakh rupees in the coming 5 years, how much value it is going to be making up. Am I clear with that? Now let's go to our PPT. And as I told you that being an investment banker, uh, not only you have to cater the client's need, it is also important for your self development. Okay, tell me guys, if you are not able to handle your own finances, how you will be able to handle others' finances? Correct?
Yeah. Yes, ma'am.
Correct. So you
correct,
should
correct.
be expert for your own finances and then you should go further for handling somebody's other finances. And for that purpose, we should understand the role of financial planning in our lives. So what is financial planning? It is a process in which a client's current and future needs that may arise are carefully considered and evaluated, and his individual risk profile and income are assessed to chart out a roadmap for meeting various anticipated unforeseen needs through recommending appropriate financial products. Many words in one line, right? Now, what do we want to say? Anyone who wanted to, put it into a simple words and wanted to explain? Pankaj, wait, let's give everybody else time, right? Anyone? Azim, Himanshu,
Well,
Simran?
it's
Yeah,
financial planning is like it's a process in which we invest our time, our money, as well as our patience. That
right.
how the money will going to compound. And the
Mhm.
thing is, in this process, we must need to assess the whole and soul knowledge of the market, as well as the various instruments by which we can we can invest to make our wealth creation very well. So this is all sort of a process, and it takes time, as well as it also create a knowledge upgradation, because earlier we used to invest in fixed deposits and so on. Nowadays we are investing in market, in share market. We are
Hmm.
investing in stock, and we invest in various kind of securities. And as we now in the age of non-fungible tokens as well as, so these are
Yeah.
the things, the things are changing, continuous changing takes place. People wants people want something to invest.
Mhm.
And also the world also want change after a certain certain period of time. So this is the financial planning process as well, that the time, it is a time which is required. As the
Mhm.
time will go on, definitely uh, the things will change, and the money which you are right now investing, that will also get compound. And as it compound, definitely you will able to uh,
Hmm.
uh, achieve your goal.
Okay, fine. Thank you. Thanks a lot. So he used a word compound. What do you mean by compounding?
Um,
Yes, Snehal, are you there? Gautam,
Yes,
Azim,
ma'am.
one of you.
Okay. Compound is an interest, ma'am, where it's an interest you get on your interest, like the amount invest. If you're investing some amount and you'll be earning some interest on that, and for some years, if you keep it like the interest becomes your capital and you earn more interest on that.
Yes, correctly said. So, what is compounding? And compounding plays a major role when you are planning for your finances, right? What is compounding? Compounding means when you are able to earn interest on interest, in a very simple words, right? Now, I'll give you a general example of your banks, right? You get compounding effect over there. So you deposited 100 rupees over there. Let's say 4% is the interest rate. So how much you will be able to receive? 104, correct? Now, after that, let's say you are not investing or sending any money, depositing any money into your bank. Now, you will be getting 4% again on 100 rupees? No, you used to get it at 104 rupees. Am I clear with that? So what is that? That means whatever earning, returns on returns. Let's consider it like this. Returns on returns. And now when returns on returns added with the future cash flow of money, that creates an impact of compounding on your finances. We'll be looking forward that in the future also. So now let's go to this part. Financial planning is a process in which clients current and future needs that may arise. So let's go it and bifurcate all these things. Current and future needs. What do you mean by current and future needs? That means what are your current goals, right? So let's say your current goals, let me put it in this way. Let's say this is your current goals, correct? Now, what are your current goals? Current goals is living a good life, right? Maybe uh, good Wi-Fi connections, internet, all those daily life expenses, correct? Am I correct, guys? Everyone? Right.
Yeah.
Now, these are your current goals. Now, so your current goals can be satisfied with your current income, correct? Now,
Yes.
for your future needs, you need to invest.
how
How? No, future needs. What are your future needs? Just a minute. Future needs. What do you mean by future needs? Basically, your long-term goals.
I'm like own house, car can be
Yes,
car.
yes, of course. Everyone in this whole group. So let's say, Azim, what's your long-term goal?
A house.
A house. Okay. Then who is else is with us? Yes, Tilagafti, what's your long-term goal? Tilagafti, are you there?
Yes, ma'am.
Yes. What's your long-term goal, Tilagafti?
Long-term goal is purchase new house, villa,
Okay.
individual
Okay.
villa,
Sorry?
individual villa.
Okay. Anyone else? Yes?
Education.
Yeah, yeah. Someone said something. Yeah.
Education, ma'am.
Education. Okay. Very good point. Laddu. Sai Kishore, Snehal, any points you wanted to add? No? Okay. Guys, understand. Yeah. Yeah, yeah.
Car, ma'am.
Car. Okay. Fine. So see, no, your every individual long-term goals are different, right? So maybe Azim want to have a house. Azim want to have a car, as he said just now, right? So he must be looking out for a Mercedes or maybe, Porsche. Let's say Tilagavti is looking out for villa, house. Laddu Kumar said education. So maybe he is looking forward for foreign education plans. So for all these things, everybody have their different long-term goals. And for every different long-term goal, you have different kind of investment strategy, right? So let's say Azim want to have a car. So maybe he is planning for 5 years. Laddu want to go for foreign education. Maybe he's planning for next 2 to 3 years. Tilagavti is looking out for a house. So maybe she's planning for 7 to 8 periods of time. So everybody's time. So in whenever we are talking about long-term goals, there are a few things which are associated. First of all, what is your long-term goal? Second, what is the time period for your long-term goal? Right. So let's say Azim is looking out for 2 to 3 years. So he must be looking out for those kind of investments where he can put up, his money into that instrument which can fetch him a higher return, right? So that he will be able to fulfill his long-term goal, which is for 2 to 3 years. Same, maybe for Laddu, he is planning for foreign education. So he will invest into that product, which can give him higher return. But now, one more thing comes along with the time period. That is known as risk. What is risk?
Well, the risk
Come on.
is an uncertainty which can
Rental.
take place anytime, anywhere.
Yes, okay, correct. Risk could be uncertainty, and everyone have a different risk appetite, right? And it is also written over here. See, that may arise carefully considered and evaluated, and his individual risk profile and income are assessed. Am I clear? Now, everybody have different risk appetite. So let me give you an example. Let's say you as an individual, you are into an age group of 20 to 30 and you are, fetching a good amount of income. If I will ask you to invest into cryptocurrency, which is most riskier right now, but can you do that? Yes, you would be able to do that. But let's say if I'll ask your father or your grandfather to invest into cryptocurrency, will they able to do that?
No, ma'am, they won't.
No. Why?
They don't
Because
have
they are
that
into
type
They
of.
don't.
that age. Correct, correct, Azim. They are into that age group where they cannot go for maximum risk. Understood? So maybe they would not invest into crypto, but they will agree to invest into bank FDRs. Maybe they will agree to invest into post office saving schemes. Guys, am I clear with this point?
Yes, one.
Right now, so everybody have different risk appetite in the terms of your age group. Now let's talk about in the terms of your income. So let's say someone is the only child in the house. He have to take care of his parents also. He have to take care of other liabilities also. And he's fetching a certain amount of income. So maybe his major portion of income must be going to cater those needs.
Yes.
Guys, am I correct?
Yes.
Yes. So maybe he will not be looking out for those kind of investments which have high risk. He will be looking out for those kind of instruments which have medium term of risk. So maybe he will go for mutual funds, which can fetch him a guaranteed returns of, let's say, with a bracket of 8 to 10%. Am I clear? Rather than going directly into the equity market.
Yes.
And let's say there is a person who does not have much responsibilities on him. He is living with his family, right? His family is from a business background or anything like that. So he do not have to spend so much. So in that case, he have a lot of income to save, right? And he also get the capacity to take the risk in that case because he know that he have a back end support. Guys, am I clear with this? No, you must be thinking that everything seems to be very individualistic approach thing. But you have to start your financial planning from your personal level. Then you will be able to cater it to your clients. Because let's say there are two people who are coming to you. Let's say one people is in age group of 40 to 50. One person is in age group of 20 to 30. Now both of them are coming to you, right? And they're asking for your expert advice. So how you're going to be judging that? So first of all, you will be looking out for their long-term goals, which we have said, right? Then you will be asking them what is the time period which they are looking forward for. Next would be their risk appetite. Am I clear?
Yes, sir.
After risk appetite, what else do we have to consider? Any idea?
Planning.
Yes. Okay. There is this statement written over here, anticipated and unforeseen needs. So that means you do not have to invest. Let's say if he is earning 100% and you are investing his 50% of amount. No, you cannot do that. You have to cater his personal needs, which is the current needs of his. And also you have to work for the anticipated or unforeseen needs. What do you mean by that? The upcoming uncertainties which can come in anybody's life, right? What it could be? Health,
Yeah, accident.
your accident or anything like that. So that means you have to work for his insurance part also. That means you have to work for that kind of products. You have to make him invest into those kind of products where he can also get the insurance part if he or she does not have it earlier, right? Next important point, which is very important in the current scenario, retirement
Planning.
planning. Yes, anyone have any question?
No,
Okay, retirement planning. Why do we need to plan for retirement from now onwards? Any idea, guys?
because the thing is, nowadays we can be able to work, but there's a time and age will come
Mhm.
that at that point of time we will not be able to work, and we will not be able to do those kind of work which is part and parcel of our life as well.
Right, right.
So for that stage, we must need to plan ourselves that we will need assistance, we will need our medical aid as well.
Yes,
So for that thing, we must need to start planning from right now.
yes. So our question initially I asked that if we invest right now 1 lakh rupees and let's say after 20 years, right, we are able to get of that 1 lakh rupees as 50 lakh rupees. Do you think 50 lakh would be sufficient for your retirement?
No.
No.
Not
Why? Because that 50 lakh value after 20 years, you have no idea what is going to be.
Yeah.
Maybe right now, if your monthly expenses is 1 lakh rupees, maybe after 20 years, it could increase to 2 lakh rupees.
Hmm.
Am I clear? So that 50 lakh amount which you are watching from here, that means from the present terms, maybe having less value in the future. Am I clear with this thing?
Yes.
Okay, I'll take one more example to make this thing clear to all of you. Right. So let's say if you are okay, let's consider this example in this way. So let's say you are planning to have 2 crore rupees in your for your retirement, right? So do you think 2 crore rupees would be sufficient? Yes. Right now, if you're looking at it again, understand from this point of view, so you feel that 2 crore rupees are totally sufficient. But let's say current inflation is going on 6%. After 20 years, can any one of you say that your inflation is going to be increasing or decreasing?
No one can say, ma'am.
No one knows. But if you will be looking
It's
at,
quiz time.
we will be looking
But
towards.
don't forget one thing.
Just a minute.
If you
please.
clear the quiz, you'll receive a badge, which you can share in your social media platform. All the best.
Okay, wait. Before we start the quiz, let's complete the other part, which is there. Yeah. So what I was asking, right now inflation is 6%, correct? So let's say if we will be talking about the trend. So you can see inflation is increasing continuously. That means after 20 years, the inflation, which is right now 7%, can also go to 17%. So the returns which you are fetching, that should be able to combat that inflation which you are looking forward for. Am I clear?
The thing is, maybe I think the percentage will not be the same as you
Yeah.
have said. Actually, the thing is, the purchasing parity, purchasing power parity, that will decrease. The money.
Yes, that will decrease. So how will it decrease? Because there is an inflation effect, right? So I'm just assuming this percentage. I'm not saying that this percentage is going to be happening over there. My point is, your inflation is going to be increasing. So we don't have any idea that after 20 years, what will be the inflation.
Yes.
So we should invest for a retirement in those kind of funds which can generate at least more than the inflation or projected inflation. So let's say if the inflation right now is 7%, right? So you should invest into those instruments which at least can give you 10 to 14%. Also, due to compounding, as much as you would be able to invest from this age, your current age, you will be able to have more amount. Why? Again, because of two factors. One is time period, and other one is
Oh,
returns on returns, that compounding factor,
compounding part.
ROI.
right? ROI. Yeah, you can say not ROI, it is return on return, ROR.
ROI.
Right? So we have discussed most of the points, guys. Now let's check out the elements of financial planning, which is investing, risk management, retirement planning, investing, allocating asset based on one's risk taking appetite. So as I said, one would be investing into mutual fund, other would be investing into stocks, right? Risk management, how to manage your risk, how much risk you can take, how much you have mitigated your risk by planning for your unforeseen needs, which could be insurance, your retirement, your health, your life itself. Retirement planning. So we have already talked about retirement planning, that why it is very much important. Tax and estate planning. Tax and estate planning is what?
It is something like
Tax planning.
how much to save our income tax.
Yes.
Direct tax.
Yes. So that is something which is part of your current need. Correct? That is something which is part of your current need. So in current, you have to invest into those instruments which can also help you to have subsidized text for yourself.
Yes, ma'am.
So for example, we have section 180C where we can invest, correct? And we also have NPS plan by which you can invest further 50,000 in our Indian context. And last, financing one needs, which is most important. As I told you, you cannot invest out of that 100%, all the 50% altogether, right? So you have to plan it in that ways. So there is one rule which we use, 50-30-20 rule. Anyone have heard about this rule?
Yes, yes. 50-30.
So 50% of your entire income. So 50, 30, 20 becomes 100%, correct? So 50% of your income should be used for your current needs. 30% income should be used for your wants. Difference between needs and wants: need, which is a basic requirement of yours; want, which you really wanted to spend to make your life a bit comfortable, or maybe um, planning your entire lifestyle. So that becomes your 30%, right? And remaining 20% you should definitely go for investing. I'm not saying saving, I'm saying investing. Difference between saving and investing: saving does not going to be creating wealth for you. Investing definitely going to be creating your money double in terms. So that means you are creating a wealth. Am I clear, guys?
Yes, ma'am.
So in the end, if I'll say it, to put it in a nutshell, financial planning involves 360 degrees of planning, right? So this is all about role of financial planning. Thank you very much.